This channel is for educational purposes only. Make sure you do your own due diligence before making any investments. And there is inherent risk in trading, so it's speculative. Just make sure you keep that in mind. Hi, this is Joe. I'm going to talk about another trade setup. I'm going to start with the monthly, go to the weekly, which is the main time frame that we're trading off of in this instance, and then we use the daily. We'll go down to for our trigger or our entry. I wanted to show another example, and the reason is that the higher time frame looks a little bit different, the starting time frame, the monthly, than last time. And so I wanted to make sure you understand how we would manage this trade a little bit differently. And I want you to understand the different options you have. So let's go ahead and get into this example. And so I've got another steel stock. This is U.S. Steel. Last week we talked about Nucor and how the monthly chart was turning around and looking pretty attractive and timely. So in this instance, we have this drop in the monthly chart for U.S. Steel starting in 2018, and it dropped down, made a bottom last year and kind of worked sideways down at a pretty big double bottom. And then you turned up and you started to show some strength. So in this area, it was actually looking really attractive on the weekly chart, but if you notice, it's pretty far away from the 18-month. Now, that doesn't prevent me from taking the trade on the lower time frames, but it does make me think I want to maybe manage it a little bit tighter because there is pullback risk on this time frame. So I just wanted to make sure you understood if there's good strength on the higher time frame and it's maybe a little extended, it doesn't prevent me from putting a trade on the lower time frames, but I might manage it a little bit differently. So let's go ahead and look at the weekly chart. Again, this is really attractive. We had the big reversal pattern, a strong up move confirmed by ADX, or ADX hitting 60 even. And then we go through the pullback towards the rising 18-week. So that is basically what we're looking for in any time frame. If you can get a pullback to a rising 18-week, especially when the 18 is above the 40, you've got a pretty good trade set up in place. There are times where this will take place, and then you never get a trigger on the daily time frame, and this might just end up breaking the 18 and failing. So that's why I like to use the lower time frame to help me trigger in. At this point, I'm going to have the two charts up. On the right, I've got the weekly that we've been looking at. And then on the left, I've got the daily chart. And so out of my book, I talk about the two time frame approach. I've got the higher time frame showing the strength and the pullback. And then the lower time frame, I'm looking for what I call in the book is a sell signal that fails. And really what that is an opposing trend pattern, which means that in this time frame, I've got the 18 above the 40 and both lines rising. And in this time frame, I've got the 18 below the 40 and prices below both moving averages. They don't necessarily both have to be falling, but I do want to see the 18 below the 40, and I want to see price close below both of those moving averages. Now, once that happens, there are a couple different ways that you can trigger in. You can use the MACD, you can use ADX to sort of help with this, but in essence, I'm looking for price to get back above both moving averages and preferably close back above the 40. In this case, the trigger could have been February 22nd. I mean, you could have gotten long on that date. And if you would have done that, your stop would have gone underneath these lows here, and you would have survived this kind of noise that took place after the test. You would have survived, and then you should have been able to make money in this trade. In this instance, because of the way the weekly chart was pulling back, you had kind of a big reversal bar off the top and then some pretty hard selling bars to the downside, some heavier volume decline. We didn't actually take that initial entry on the 22nd. We sort of waited, and I actually really liked the fact when this came back down and tested this prior low, made it really look like a 1, 2, 3. So you have the break of the trend line, that's 1, and then getting back down and really testing this low was a good 2. And then as this started to work its way back up, we started to see the MACD line crossing back above its 0 line, and we had a low ADX signal. So that's a nice combination to be on the lookout for.
and we actually got long on this big green bar. Now, we weren't exactly early. We got long at 1948, probably right about the middle of that bar. And our stop goes, or we put our stop about 10 cents below the low of this swing low, this prior swing low. And so the risk in the trade was $2.77. That's the difference between our entry and our stop. So at this point now, we're going to start looking at levels of R, meaning 1R would be 22.27. That means you add 277 to 1948 and you get your first level of R. And at 22.27, we actually took a quarter off. So if you bought 1,000 shares, you'd be taking a profit of 250 shares at 22.27. And then what we do in this instance, again, because the monthly chart is not in an optimum position, and it's not the type of situation where we have a little bit of pullback risk on the monthly. In essence, we're going to immediately go to a break even and raise our stop to our entry point at 1948 as soon as it hits 22.27. So now we're in a risk-free trade, and I can't emphasize the importance of trying to get yourself into a risk-free environment. And that's where you're able to take a profit, even a partial one, and then put the balance of the position, 750 shares, at a break-even level where you entered. At that point, the stress level in your trade is going to go way, way down, and it's going to give you the ability to make a lot of money in this trade, potentially, if it keeps going. And if it doesn't, you take a small win. So try and get yourself into that risk-free mode as often as possible. Don't do it right away. What I used to do when I started out was, as soon as this would like get above 20 and a half or something like that, I would go to a break even. And I ended up getting stopped out a lot. And so I was sitting there thinking to myself, okay, I'm getting myself to a risk-free trade, because if it comes back down, it's risk-free. That's true, but you're not giving it enough room. You got to make sure you understand how much a stock trades and what noise can be. Because if you just raise the stop really quickly, you're going to end up getting nicked a lot, taken out of trades that are good trades. And as I said, early on when I was trading, that happened to me a lot, and I learned that you needed to give it a little bit more time before you go to that break-even level. And so at this point at 22.27, I'm at the 750 shares is at 1948, and then our next target is 25.05. Well, as it happens this morning, the stock actually was in the pre-market was over 25. We took our second target in the pre-market. Now it doesn't show here, but we did get a profit at 25. In the pre-market. And then what we do is we raise the stop to 22.27 and we go to 1R. And the reason why I'm doing that, again, talking about the monthly chart and the fact that there's pullback risk, I'm going to play this trade much more aggressively than I would have in something like the Nucor last week, where I said I wanted to give it a lot more room, to give it more potential. In this case, I want to just play the run as far as it wants to go, and I'll just keep taking targets. Now, I'll take a target at 1, another quarter at 2, and then another quarter at 3. And then I'm not going to take any more targets at the fourth target. I'll have the last quarter of my position. So I'll have 250 shares left. And at 4R, I'm going to raise the stop to 3R. And then at 5R, I'm going to raise the stop to 4R. And then at 6R, I'm going to raise the stop to 5R. And you just keep doing that until you get taken out of the trade. This gives you the ability to really have a monster winner with the last piece of the trade, and the overall trade could become a really big win if you do that. But if you notice, what we're doing is we're not taking a lot of risk in the trade. We're taking most of the pullback risk out of the trade each time we take a profit. So this is a really good strategy to add on to your longer term trades. You put these types of trades on, it can really add to the bottom line and improve your equity performance during the course of a month. So I definitely recommend playing around with these targets and learning what works for you. Again, if you like this type of video, please hit the like button for me, and we'll see you next time.